All right, so sometimes we're asked about the impact of a journal entry. So let's look at this example. What effect, and we mean what net effect, does writing off a specific account under the allowance for doubtful accounts have on an asset, a liability, or net income? So let's look at each. So first we just have to know what the journal entry is for writing off a specific account under the allowance method. So that's debit allowance and credit accounts receivable. All right, and so we can look and see that allowance is a contra asset and accounts receivable is an asset. All right, so the question is, hey, does it affect an asset? We can say, hey, this is not a liability, so no, it does not do that. Net income is made up of revenues and expenses. This is not a revenue account. This is not an expense account, so it's not going to affect net income. Okay, so we're just need to see, does it have a net effect on assets? So let's put it into our T account. So we have debited allowance for $500. And we have credited accounts receivable for $500. To get to the net realizable value, we always net these two accounts together. So when we net these two accounts together, we can see a credit and a debit nets to zero. So the impact on this has zero impact on the net assets of the company. So let me know if you have any questions about that.